Good morning, good afternoon, good evening, Alpha Traders. This is your Tuesday version of Crypto and Clown World. Here we are, live from the Crypto Caravan. Beautiful Carson City, Nevada. Rain this morning, pretty sunny right now. What is Bitcoin doing? What is the most volatile asset ever known to the trading markets doing today? Just got the new daily candle, okay? First, we're going to talk about yesterday. You can see this yellow dotted line right here. This is the center of the new weekly range we got yesterday. The daily range yesterday pretty much encapsulated it. And you can see Bitcoin to open the day. Where did it come down to? What is this green line? What crazy support and resistance is this, Bilbo? It's got nothing to do with data sets, people. Number one. Okay, it's got nothing to do with data sets. It has everything to do with price action volatility ranges. That green line right there was the first support level to this daily price action volatility range. That red line's the bottom. That red line was the top. That yellow line was the middle. Bitcoin found support there and through most of the day slowly climbed. Got back up in the daily range, had one more spill out. Where did it bounce? Where did it bounce from? What is this red dotted line? That is the bottom side of the weekly price action volatility range. From there, it ripped up. Where did it go to? You guys, I mean, if you're not seeing this, if you're watching this on YouTube for the first time, there's a reason why we build indicators like this. One rejection off the top side of the weekly range. And that the white cross line, that's the daily candle 68.3 Laplace distribution range to the top side that was overlaid perfectly on the top of the weekly range. Rejected once, found support on the top of the daily range, went up, rejected off the weekly again. Going into the end of the day yesterday, found support on the center of the weekly range. What just happened? We got our first 15-minute candle of the day. Bitcoin dropped down, bounced off the middle of the weekly range and ran up to the top side of the 68.3 daily candle Laplace distribution range. That's top. There's the bottom. The next 15-minute candle dumped out, bounced off the middle of the weekly price action volatility range. Now we got a new 15-minute candle. We just got it 1 minute ago. Is this thing going to give it another shot? The bear's going to push this down to that 39,192 area again. Will price action hold there? This is an area where there's going to be a battle. This is why we created this indicator with daily, weekly, and monthly price action volatility ranges. That is the battleground. Bitcoin pushed hard yesterday to close above the center of that. I talked in yesterday's stream that the bears going into this day that was yesterday, we're going to try to push Bitcoin down below the bottom of the weekly and close yesterday's daily candle down here. Bulls had another idea. Look where the bears are defending hard, though. They're going to defend the top side of that weekly range with everything they got. If the bulls can manage to close a 4-hour candle, preferably a daily candle, above the top side of that weekly range, Bitcoin's going to make a push up to the center of the monthly, probably back up to about that 41.2 area. All right. And you can see this red dotted line up here. That's the first resistance level to the weekly price action volatility range. It's right by the middle of the monthly. There's going to be a lot of resistance here. If Bitcoin makes another push, gets above here on the 4-hour candle, hell, it could happen this first 4-hour candle. You just never know with Bitcoin. It's very volatile. The first standard deviation, this blue cross line, that is the first standard deviation normal distribution. It's right below that area. So on today's current daily candle, there is a lot of resistance right here. We're talking about the 41K area, right? It's 40,944. Then you got 41,160 and 41,231. So from about 41K to about 41,230 area, there's a lot of resistance right there. If the bulls can close the tomorrow or today's daily candle above that area, it's going to be looking good to make a push at least to the top side of the monthly. That's up there at about 42,175 area. So this is what we're looking for. Let's go over here now. Here's our probability chart, right? Where we've got our projections going. I've got a nice little projection going from the 41K low. Bitcoin, once it dropped down below the bottom side of the 68.3 projection, that's this blue and pink line here, it has not been able to close a weekly candle above this dotted line that is the mean of that projection. You can rejection, even dump down again. Had a nice weekly candle though there. Ran another weekly up, rejected. The last week it made a run, rejected. Now here we are. First standard deviation is at 40,676. Made a push for that yesterday. The second standard deviation that's at 44,118. Okay, 44,118 just happens to be right on top of the mean of that projection. So here's the thing. I seriously doubt Bitcoin's going to close this weekly candle above the mean of that projection. Why? Because this 2SD is right there of normal distribution. There's a 95.4% chance BTC will close inside that range. Trading is all about probabilities, okay? Volatility, probabilities, and statistics is what these algorithms that are trading these all this low time volatility, 90% of the liquidity down there, it's all these algorithms that are definitely programmed with this information. So it's going to be tough for the bulls to get a close above 44, 117. That'll push up. If BTC were to make a run, that 2SD will probably be about 44.3 area, 44.4 area. It does fluctuate on that current candle. So, yet to be seen. Is it going to make another push? I wouldn't be a bit surprised. It would not shock me at all. Bitcoin makes another run at it this week. The probabilities are against the bulls, though. So what's that tell me? Ball's in the bear's court, right? Ball's in the bear's court. Let's go over to our ultimate power mean. Beautiful little indicator. There's another issue. Since Bitcoin, right, we had that nice freaking run on the 7th where we got back up. Everybody was getting all excited again. Bitcoin was back up, 42.6 area. Look at that. Look at that. They run it up. We ran it straight back down. Price action got back down below. The red dotted line is the reverse fissure. The white dotted line is the reverse wave trend. As soon as that was happening, that reverse wave trend crossed back down the fissure. Right here, it was getting ready to cross back up. Bears did not want that to happen, so they ran that price action right back down. Rejection, 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 rejection. The reverse fissure is a rejection point right now. Bitcoin on this 4-hour chart needs to close a candle above, I'm even going to say 40K. That reverse fissure on the 4 hours, 49,750-ish. If Bitcoin can close a 4-hour candle, I'm saying up above 44, this could all turn around. The power band mean is very tight. The 9 length, the 33 length, and the 99 length variance log moving average. The reverse wave trend, the reverse fissure is literally 49,750 is literally about $1,000 range. That is super tight, right? That is super freaking tight. And if we go over here, look at the 4-hour right now. Look at the volatility bands. Squeezing. There was squeezing price action. Price action right now is above the Gaussian mean. The bands are starting to spread apart. Now, if I'm going to think about probabilities and what I'm seeing volatility-wise, this is an opportunity for the bulls to push this and expand the bands. Make that push, right? Got to make that push. Let's see if the bulls can do it. On the 4-hour, we also have the log return Z-score. It's climbing up. Once again, just like it always does, you get it when you get an outlier to the downside below these confidence intervals, it's usually going to run its way right back up to the top. Happens all the time. You run an outlier up into these confidence intervals, it makes its way back to the downside. So now we're working our way back up. There is no divergence to speak of at all. Here, let's see here. Let me see something real quick. You see this low on the return oscillator. You see the low on price action. You see the low on the return oscillator here. Look at the low on price action. What did that set up on the 4-hour? Hidden bull divergence. Did it play out? Yeah, it played out big time. Price ran 38,250, 39.9, right? Ran almost up 2K. So here's the one good thing though. When it was up here, this is a higher high on the returns oscillator, just like it was on the price action, just a little bit. There is no bear div of any sort on the 4-hour candle. Now, why am I talking? If I'm always talking about trading low time volatility, why am I on the 4-hour? Because when I start a new day of intraday trading, I start on the 4-hour to get my bias where my capital is going to be best invested. Longs or shorts. When I'm scalping low time volatility, where do I want my capital allocated to? And when I'm talking about when I figure out a bias, when I'm looking at the 4-hour and the 90-minute, when I'm looking at that 4-hour and the 90-minute, I get an idea between that workflow, which way I want to allocate my full account, not leverage. If you're using leverage, you're just a degen gambler. Bottom line, good luck. You're going to be liquidating your account at some point. It's just the way it is. There's a reason why exchanges offer leverage. If you haven't figured out that you are liquidity for these algorithms, you need to wake up. You need to wake up. There's a reason why you're never withdrawing money off these exchanges. You're doing nothing but depositing them. You might as well just go to the damn casino, go to the poker room, go to the blackjack table, right? For Christ's sake, go play craps. Go do something. Don't be a degen gambling, because these algos are out to get your ass. You start using leverage, they will liquidate you. 100%, man. Right now, it's looking like the entropy percentile on the 4-hour is trying to expand, right? Heading back up into positive correlation. The entropy itself is back into randomness, losing its correlation to the downside. The z-score of historical volatility is turning down, heading into negative correlation. The volatility percentile contracting, heading into negative correlation. Everything here is telling me price right now on the 4-hour that I should be allocating my entire account, low time frame scalps, to the top side. That's the read I'm getting on the 4-hour, especially when I look at those volatility bands. And right now, price is above the Gaussian mean. You can see how these 4-hour candle, it stopped right at the 3rd standard deviation band. Now they're starting to spread out there. That gives some better targets on these higher levels. But Bitcoin's going to need to stay above that 39.2 area, okay? Because you close this 4-hour candle below that Gaussian mean, it probably is going to work its way to the downside. Things will change. This is why I've got my look on the 4-hour. Now I'm going to go to the 90-minute chart. Take a peek here. And on the 90-minute chart, you've got a positively correlated historical volatility z-score going to the downside. Now, the volatility is given a different read up here. The percentile is given a different read than the historical volatility, where it's actually contracting, negatively correlated. This is saying price is going to be going up. This is saying price is going to be going down. The entropy itself is saying price will be going up. Now, depending on this next 90-minute candle here, right now it's expanding, negatively correlated, the entropy percentile. So we got a mixed bag right here. We got 2 saying down, 2 saying up. Here we go. Look at the 90-minute. What happened? We got an outlier up into the top side of those little confidence intervals. So now it's turning back down to the downside. But at the same time, look what's setting up. Look what's setting up. Especially from that point right there, we're setting up some hidden bull divergence. The fishers are turning down though. The DLP's on a nice. The one thing I like for the DLP though, and the log return z-score, is there's no bear div that was built. The bear div was right here. That top and that top, did it play out? Yes. Look at the 90-minute. Boom, it's back down here. 90 minutes testing that reverse wave trend, reverse Fisher area. Actually, not even close, but yeah, you can see the 9-length variance log moving average has crossed up the 33. It's crossing up right now. It's crossing up the 99. 33 is turned up. Wave trend has finally Look where it crossed down, right? Boom, boom, boom. The wave trends crossed back up to Fisher. Wouldn't be a bit surprised to see 39K tested. That's right down there where that cross happened. I don't give a shit about these stupid golden crosses or death crosses or all that crap that has to do with traditional technical analysis. That's exactly what it is. It's crap. Crap. 100%. Makes 0 sense. If you're going to use a moving average, use a log return moving average. Save yourself some heartache. So the returns oscillator is actually trying to, I'll tell you what, this 90-minute, it's kind of a bag. It's a mixed bag. I'm going to say that. Got to keep an eye on the variance right here, because as an alpha trader, this is what we're looking for. We're looking for these outliers. We're looking for these outliers. And look, you get an outlier right here on that 90-minute drop, 3 90-minute candles. Great freaking volatility scalp. Guarantee on the low time frames it looked great. Had an outlier as well on the log return Z-score. The returns oscillator was coming down. With what? With hidden bear divergence. Beautiful thing what we got here at Alpha Trading. Look at these powerful outliers on the variance, right? Now, that was that big 90-minute hoop. The D-gens would call that what do they call that? A BART? It's all volatility, man. It's all volatility. Let's drop down here on the 45-minute, take a peek. Oh, wow. 45 has got a ton of hidden bull divergence. Let's see if that plays out. Now, lower lows, right? Ever since this bad boy was rising right here, you were getting lower lows on the return oscillator, setting up hidden bull divergence. Not on the log return Z-score, and it's kind of hovering right between the confidence intervals. We have a contracting entropy percentile, negatively correlated. We are losing correlation to the downside as entropy goes back into randomness. The historical volatility Z-score. Look at the correlations, flat as hell, but it is heading back up. Look at the volatility. Volatility is printing a 6 on the 45-minute. This will be important to watch as well. But on the 45, unlike the 4-hour, it's back down below the Gaussian mean. Bulls need to wake the hell up. But like I said, from what I saw on the 90 and the 4-hour, I do like allocating my entire account to scalps to the top side, to be honest. And why do I say that? Well, that's because that's where the most profit's going to be. I'm not saying I'm not going to counter trend during that intraday trading. So counter trend to me would be to the downside, but I'm only going to use about a quarter of my account. So I'm going to use my full account trading with my bias on the low time frames. I'm going to use about a quarter to a third of my account counter trading that bias. This is what's going to make you a very profitable trader. Don't get emotionally attached to your trades. Always take your profits and limit your losses. If a trade goes against you, just get the hell out of it. Look, if you want to be a professional trader and you think that being emotionally attached to a trade is a good idea, it's fucking awful. If you're emotionally attached to the trade, you're not going to take your profit when you should, and you damn sure aren't going to get out of a trade. Your ego is going to take over and be like, I'm a great trader. I'm a professional trader. My entry was perfect. Well, this is just Bitcoin. It's messing with me. And next thing you know, the data set's $2,000 above or below, whether you were short or long, and you're screwed. If you want to be a professional trader, be a pro. Don't use leverage. Don't be emotionally attached. Learn where to take your profits. Well, Bilbo, where do you take your profits? Oh, maybe at price action volatility ranges at the top of the weekly right here, right? Maybe at support levels for the daily price action volatility range? How about distribution levels that overlay the top of the weekly, like yesterday? You got the 68.3 Laplace distribution range. Where do I take profit? Right there, man. Even front run that sucker a little bit. Make sure you get your profit. It's all about wins, right? It doesn't matter how big of a win it is. If you're winning 8 out of 10 trades and the 2 you lost, you got out immediately when it turned against you. Hello, wake up. You're a winner, because your profit margin is going to be massive. When you get out of those losing trades, the percentage is super small. Your wins are going to be a lot bigger. And if you trade low time volatility and you use volatility probability and statistics, your P&L is going to skyrocket, right? Your P&L will skyrocket. Let's see here. Now that I went through that little bad boy, you know what I want to do real quick though? I just want to take one more peek at this 15 minute. Ton of what? If you got lower lows on price action, higher lows on the oscillator, and you got the oscillator getting ready to bounce off the zero mean, that's bull div, and that's 3 big fat stabs of it on the 15 minute. I'll be a bit surprised if this thing pops and we get the entropy percentile popping, positively correlated. That you can see the entropy definitely random, losing its correlation to the downside. You want to see this historical volatility z-score pop too. On the 15 minute, just like the 45, volatility is low. We are below the Gaussian mean. Sometimes you might get a flush. But when I'm seeing all this bull div here, when I'm seeing bull div on the log return z-score, I'm watching. I want to see when the variance is going to pop. What is variance? Variance is the spread of data around the mean. Okay? What is that spread of data around the mean? It's volatility. The standard deviation of returns is volatility. Let's call this straight. Quit dicking around with that traditional technical analysis. Remove your head from thy ass. Learn how to become a professional trader. If you're trading traditional TA and you think you're a professional trader, you got another thing coming, because you're not. The professionals are not using traditional TA to trade with. It's just not happening out there, but they're damn sure pushing it on the retail traders. This is an industry-wide scam, people. You need to wake up. Now we're going to pop over on traditional markets. I want to see what the volatility range estimator has to say about the nice move SPY did today. Up 9 points. Yep. And I talked about this yesterday. What did I say yesterday? Go to the stream. I said, if SPY can open up inside its daily price action volatility range, this is exactly what I said. I told everybody the new daily range was going to be in this area. And that pre-market, if SPY can get up in that range, it's going to go to the top side. SPY almost ran a 95.4 Laplace distribution range to the top side. Right? Beautiful move. It was actually a beautiful freaking move. You can see not only pre-market, because look, here's the top side of the 68.3, bottom side. SPY pre-market got above it and opened up in a daily range, blew right through the bottom of the weekly range, center of the weekly, and top of the weekly, and closed up here. This is a strong freaking close for SPY, man. It really is. So where's the new daily going to be? I'll tell you where the new daily is going to be. It's going to be right around in this weekly area. Okay, it's going to be like right in here. This is what you want. You want this daily range above the weekly, because then what's going to happen? SPY is going to push. I'm telling you right now, SPY has not tested. Wait a minute here. Let me take one more peek. What was that area? Give me a second, guys. Let me go back. No, I got confused. I think of NASDAQ. It's all good. If SPY has another good day tomorrow It's going to run up and test this monthly range. The bulls are going to push back up to this 434, right? This 434 region, where if we go over here, we pop on our probabilities on SPY. I don't care about the projections right now. Let's turn them off. Remember, I talked about SPY making a second standard deviation 95.4 Laplace distribution move this week. Why? Because they're tight. Look at the bottom side. These are not tight. They're way far apart. It's tighter to the top side. That's a volatility magnet for me. Okay. Now look where the second standard deviation normal distribution 436 area. Look at the top side of the monthly. It's right about 436. SPY could make a push up to that 2SD on the weekly. And if that happens, man, I mean, these markets could turn around. These markets could definitely turn around. I like SPY. Traditional markets look good. Had a great day today. See what NASDAQ did. Very powerful indeed. So yesterday, what happened? What is this green dotted line, ladies and gentlemen? And why do the candles close there? I wonder why. Wonder if it has anything to do. Here was NASDAQ's new weekly price action volatility range. Here's the first support level for it. Tried to get a wick below. No, not going to happen. Close that weekly support level. How many wicks? 1, 2, 3, 4. Kept closing, then made a run to where? The weekly range, right? The weekly range. Not only that, first standard deviation move and beyond. Almost made a 95.4 Laplace, right? Just like SPY did. Look where SPY's at right now. Up above the center of the weekly. I mean, NASDAQ. Sorry, guys. Jesus. NASDAQ right now opened up the new day above the center of the weekly. This is bullish. This is bullish. I'm telling you right now. This is bullish for SPY and NASDAQ. Let's see here. NASDAQ. Oh, building up very nice weekly candle. Did here too, though, right? Had some, whoa, what happened? But anyway, look where the 2SD and the 95.4 Laplace up here. Right around 14. Right around 14K. And I'm telling you right now, 14,143. Where was that Laplace at? 14.6. Oh, wait, prompt Jesus, I'm on the wrong. What the hell am I doing? 14.1, 14.2. Wow, does this thing got that kind of power? Can NASDAQ make a third standard deviation move? I'll tell you what, it's right at the monthly range, guys. It's right up here. Boom, there it is, the top side. This monthly range on the NASDAQ is lining up with a third standard deviation move where the monthly range on SPY is matching up with a 2SD and 95.4 Laplace distribution move. Powerful. I like traditional markets, man. They look bullish to me. The way this is all setting up, SPY is going to open up a new daily price action volatility range above the weekly, where NASDAQ's not. NASDAQ's not. You can see we already got the new day on NASDAQ. It's down here. But if NASDAQ stays up here and has a good day, you're going to get the weekly, just like SPY's going to tomorrow. That's going to be bullish going into the end of the week. Like I said, those weekly candles could close up there. Hell, NASDAQ can make a 3SD run. Doesn't happen often in traditional markets. That's why we like to use Laplace distribution in Bitcoin, right? Because it contains that volatile asset. SPY and NASDAQ aren't as volatile as Bitcoin. So you can, at 3SD moves, I mean, it's a big deal, but Bitcoin does much more volatile moves. So what I'm saying is that NASDAQ could easily make a 3SD move. SPY could do a 2SD move. If that happens going into the close of the week, you could see this market turn around 100%. Yes, you could. And with all that being said, that's going to wrap it up to finishing up on that traditional markets. Let's see here. So if you're watching on YouTube for the first time, we are Alpha Trading. We trade volatility, probability, and statistics, and we love to teach people to do the same. The link to our Discord is in the description of all of our videos. Come in, check us out, look in the shop channel. There's 2 different levels of our Discord that get you access to the alpha trading system. We do not sell indicators at Alpha Trading. We sell levels of our Discord which gets you access to this alpha trading system. Open up a support ticket. Tell us what's on your mind. Ask us any questions you want. We'd be more than happy to show you examples, talk to you in the waiting room. It's not a problem at all. I want to thank everybody for watching live in the Discord, and we will see you tomorrow at 5 p.m. Pacific Standard Time at the daily close once again. And wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. See you tomorrow.